good morning again, YouTube. This is Sean with WickQuidity. Just wanted to bring you another trade review, breakdown that I did here. You'll see on the screen here, this is the S&P 500. We're down on the 30-second chart. Obviously, I'd already entered the trade by the time I started recording this. Just wanted to kind of give you a quick breakdown on this. Before I do that, guys, if you would like and subscribe to me, go visit my Facebook page, Sean Trades with Quiddity, link in the description. Follow me there, and you can see more of these trades as I take them. I do have more videos coming, wrapping up a market structure video today, hopefully. But anyway, I wanted to bring this trade to you. I took this trade last night. That'd be February 26th. About 10 o'clock-ish Eastern time. I don't typically trade S&P 500 or any of the more U.S.-based indices and things in the evenings. Usually when I do trade evening trades during that Asian session, I'll trade maybe gold or the Nikkei or something along those lines. But this setup was here. And I had some alerts set up from earlier in the day. So when price made this rally where you see that, orangish yellow arrow running up into that little zone, price gave me an alert. Or TradingView gave me the alert. So I flipped over to the chart and was like, man, let me look at this. And we got this nice little triangle pattern at the top that was inside my higher time frame zone. And, we broke down out of that triangle and, started making some real nice moves. And you'll see here in a second, you'll see the lines pop up as I continue to, follow the trade and kind of try to decide what I want to do here. We got to a point where I felt like I was going to be wrong on this trade. I felt like it wasn't going to finish going my way. Because you see here, we kind of have another triangle situation where we get a little bit of a breakout. Then it's going to kind of continue. So on this trade, both my 30-minute or 1 hour, I kind of flip between the 30-minute and the 1 hour is my higher time frame, was downtrending. The 5-minute was also in a downtrend. And then this 30-second chart, was obviously in an uptrend when it came into my zone, and then trying to sell back off, with the correction to the downtrend. I think my original risk to reward on this was a 2.7 to 1. I ended up closing it out a little early. I'll close it manually here in a minute. You'll see. But this was, for me, this was a really good, really solid little trade, especially for that evening. That Asian session, trading the S&P 500. I've never done it much. I've never had a ton of success with it. I do trade the S&P and the NASDAQ, pretty regular, during the U.S. session. But, there seemed to be decent volatility going on for the time of the day it was. And you'll see here, we got sideways for a minute, and then we broke out. So I almost wanted to close my trade here when it broke out of this consolidation period, but I told myself that, if I'm right on this trade, then there has to be, this is the Wyckoff move, or this is the start of the Wyckoff move, where we have a range-bound market, although it's a really tight range, and then a move up. Now, normally when that happens, I don't like to see so many candles break outside the range for me. I kind of have a rule in my head of, it needs to be between this many and this many candles, or it needs to look like this. So I was a little concerned that I may miss out here, and I was really waiting on if it made that little M there. If it had closed another candle higher, I already made up my mind I was going to close the trade out early and mitigate my loss. But it made this little M here. Then it kind of retested it here. And then we get a really nice push down. And for me, that whole time, even though we broke up, but based on my market structure rules, we were still in bearish order flow. We were still in a a bearish trend now on this 30-second chart, even though we broke out of that consolidation to the north. So we get that little tiny little M. We get a retest, and then when it breaks down here, it's going to break down pretty fast. So I really kind of have myself set to either knew I was fixing to close this trade manually if it closed above these most recent little structure that we have, or that it should accelerate down pretty quick. It was one of the two things was going to happen, but I knew right about now we're going to get a little close candle under that structure, and then once we get there, it goes. So once we get that good close, it's going to move fairly well to our side. So being able to kind of analyze this stuff and see it sort of real time, so to speak, understand that I felt because the two higher time frame, or my higher time frame and my medium time frame, were in a bearish situation, that this time frame was most likely going to be bearish as well. And understanding that, trading out of a supply and demand zone, which I didn't leave drawn out on the chart for whatever reason. There's a nice move. But that is where the little triangle is. It is in the supply and demand zone that was created on the 5 minute. You'll see me here. I'm getting ready to probably close this trade manually. It's really close. There you go. When I closed this trade, it was 11:20ish p.m. And for me, I was past my bedtime. I act like an old fart sometimes. So being up past 11 o'clock trading is usually out of my MO. So I did manually close the trade right at probably a 2-to-1 situation there. And if you go back and look at the charts, you'll see, because I looked at them this morning when I got up, price went like to the tick exactly where my TP was listed at. However, it's a good thing that I closed, because sometimes when price hits it to the tick, sometimes you'll get partial closes and things of that nature when you're trading futures, and then it kind of reversed back up to to where my stop loss would have been. So we were able to catch this move, and we were able to capitalize on it by not being greedy. And I said this in one of my other videos, guys, I typically trade really conservative. Now, that doesn't mean I trade terrible risk rewards. I at least in my opinion, a lot of my trades are, about 2-to-1. Between 1.5 and 2.5 is my sweet spot. I do take some larger. I do take some bigger, or some smaller, excuse me. This one worked out at a 2-to-1. If you win a good amount of your trades, or a fair amount of your trades, you're going to make great money at 2-to-1. There's no reason to be overly aggressive, at least on your TP1, so to speak. If some of you folks like to, put multiple TPs in and try to let a trade run, that's great. Please feel free to do that. I don't do a lot of that. I just find that, if you take half your position off at your original TP, and then price runs, and let's say your original TP is 2-to-1. Okay, so you risk $100. You could have made $200 at the 2-to-1, but you take off half of your position. So you locked in the $100, and now you're trying to let the other one go to 3-to-1 or 4-to-1. Well, let's say it goes to 3-to-1. Well, you're 3-to-1 on $50, right? Because you've already closed out half of the original risk. So that's $150. So if you get to 3-to-1, instead of making $200 on the trade, you'll have made $250. If you get to 4-to-1, instead of making, $200 on the trade, you'll have made $300. And yes, that is significantly better, especially when you're doing things at percentages. But too many times for me have I seen that going for that extra 3-to-1 or 4-to-1, I end up reversing and either stopping out break even if I've moved my stop or going to stop loss, if I wasn't able to move my stop, depending on my trade management strategy for that specific one. But even at break even, so now I've made $100. Okay, if it breaks even. So let's say I always move my stop loss to break even. So I don't hit the 4-to-1 TP2, it comes back break even. I go, yay, I won $100. But in the grand scheme of things, that's a half win. To me, that screws up the risk reward, right? Because I still had to risk $200 to make the 100. So if you're going to have a second TP, be careful with that. Close out the majority of the position. Close out 75% of the position at TP1, and then let the second part of the position run to an absurd amount, 10, 12, 15 to 1. That way it pays off for you, and your risk reward is better than 1-to-1 at the end of the trade. So, guys, that's my 2 cents on that. Sorry, I got kind of sidetracked there. Anyway, this was a good trade, a good example of knowing when to close a trade. Actually, on a different chart, I had 2 screens up on my TradingView web browser. I had this chart pulled up, and I had kind of knocked it down to a 15-second chart so I could see a little more structure as it got down to the bottom there. And I didn't like what I was seeing, so I went ahead and closed it out. And like I said, it did go a little further, get down and touch the TP to the tick, and then reverse. So appreciate you guys. Watch the rest of my videos. I've got a lot more coming. You can learn how over time as I get the rest of my videos uploaded, you'll be able to learn how I execute these trades on a daily basis. Do I win all my trades? Absolutely not. Nobody does, but I win most of them. And we'll, as time goes on, will teach you how I execute my trades and how I keep track of my trades, my trade management, my money management strategy, my trade logs and things of that nature. Sorry, my brain's kind of going left here. And we'll go through all that as time goes on. Guys, I appreciate everything you do. Drop a comment if you got any questions on the execution here. I'd love to answer questions and clear things up for you guys. Y'all have a great day.